Hello guys, this is Anshuman Rao and welcome back to another video. So this video is gonna be a very special video because in this video I'm not going to share any trade breakdowns, but this video is gonna be about covering up the risk management part of trading. So in this part we will be covering the risk management section, which most people mess up. And let me tell you, risk management is not a part of trading or not a aspect of trading, but risk management is trading. It's and not a component or an aspect, it's trading. Risk management is all the thing. With psychology you need risk management, because let's just say your risk management is too fucked up, and even though you have a 70-80% win rate in the markets, which is god level accuracy, and nobody achieves that 70 to 80% if you see a long term overview. But let's just say in 1 month you have taken 300 trades, and out of 300 trades your accuracy is 70-80%. Let's just consider that this is a very hypothetical situation which I'm talking about, and this is impossible. Even getting a 50% win rate, which is even though you don't have any edge in the market, still then getting a 50% win rate over a longer period of time is impossible in the markets. And let's just say you don't have any trading edge, you don't have any skills, you just come to the markets, you have this two buttons, buy and sell, and still then you have a 50% win rate, 50-50 chances of winning and losing in the markets. But that's not sustainable, and that's not gonna be providing your bread and butter if you think trading as a career. That path is just basically simply uneducated gambling. Not just gambling, it's uneducated gambling. And you should have an edge. Even if you have an edge in the markets, you tend to be more disciplined towards the markets, and you tend to be more disciplined towards your risk management protocols. And even though if you follow all this, your win rate might be 45 to 49% in a longer term, and I'm talking about 3 to 4 years at those time frames. And let's just say that you don't follow the risk management part, and you risk the amount of money, the inconsistent amounts of money in different trades. So in that case you are destined to failure in the financial markets, because you don't have a risk management protocol, and you don't have the consistency, and you don't have the proper risk management plan. So this video is gonna be about this risk management. Welcome to the risk management 101 session. So why risk management, why it's important? Because risk management gives you, first of all, consistency. Risk management provides you consistency. Risk management consistency in PNL especially. And risk management helps you to win more and lose less, which is the most it's the most important aspect of trading, to win more and lose less. Because if you are losing less, your winners are high and losers are less, and the net PNL will be obviously positive, and you will be closing the month, or you will be closing the week, or you will be closing the year respectively with a profit, which is the end goal of every trader. Doesn't matter you are a swing trader, or you are a day trader, or you are a scalper. Scalping is a very risky job. I would not suggest my audience, because most of my audience are beginners, so I will not suggest my audience to jump directly into scalping, I would rather suggest them to try swing trading, or even after a little bit of time spending with swing trading, I will suggest them to go with day trading. And the this is the two things which you have to follow, which risk management provides. And also risk management provides with risk management, what does it provides? Third is statistical data, which is the one of, again, the most important thing, statistical data. Because if you have the data of your trading, if you have a well maintained data, like I have my is the funded next account, and as you can see, these are the inactive accounts. So many inactive accounts means which I have passed, and this is all the data over here over my 2 years of trading. And these are the breached accounts, the accounts which I have failed over the period of time in 3 years. So I have all this data. You have to maintain all this data throughout your trading journey. So this is, if you follow risk management, it will give you a consistent statistical data. The data will be well maintained. So this is all what risk management provides. Now, how to actually use risk management for your own profit? For our own benefit and for our own profit, what you have to do is, let's just say you have a full grown account size. You just purchase a funded account, or you just deposited a amount in a brokerage account, let's just say $50,000. So what you will do in a single trade, what a beginner would do with no trading knowledge, he will just risk 30 or even 25 or even sometimes full $50,000 in a single fucking trade, which is, it's just like jumping off of a building. And obviously this is not the approach to trading, and I will not be recommending to anyone to do that. But the thing is, I just will not recommend. But if somebody does that, just comment me, and I will be pairing up a Zoom call session, and I will be hiring a mentor for your mental illness. Because this is what mental illness looks like. You just have a $50,000 account and you just throw all upon one trade, which is complete bullshit. It's not gonna happen. If it fails, if the trade fails, you're gonna lose $50,000 of your whole entire capital. And this is not just the capital that you will lose, but also what you will lose is confidence in the markets, along with your mental capacity, and along with the money, obviously, which you have earned, the hard earned money actually. Because if you have deposited $50,000, you might have earned something, or you might have took a loan to deposit in your brokerage account, or to purchase a funded account. Who knows? Who just knows? The money has come from a source, and earning money isn't hard. Even though you are trading, it's still hard. Earning money is hard. It might seem easy because the experts in trading make it seem easy, because the experts are in this field for many years, and they seem, any professional, whether it's cricket, whether it's football, or whether it's trading, not only just in trading, in any sports or any profession or whatever, experts seem to make it look more simple, because they are experts, obviously. And if you see the experts and you think that, yeah, this is the only thing I want to do it, and this is the only thing that is a quick money scheme, that's not gonna happen actually. So this is all about thing, and let's just start first step, how to approach a $50,000 account. Let's just say a $50,000 account, because most of my trading audience trades prop firms, and trading prop firms actually requires a little small amount of capital, and you just give the prop firm a small amount of capital, and they provide you with a big funded account of a bigger amount. And let's just say you have a $50,000 funded account, or let's just say any account with this amount, any brokerage account, doesn't matter. So what a professional trader does, in one trade he or she risks 1% to 2%. 2% is the max. 2% is max. It's the max, right? So 1% of $50,000 is $500 actually. So see what a professional does and see what a beginner does. There is a huge gap between a beginner and a professional, that a beginner might risk the complete $50,000 account, or it might risk the complete $50,000 brokerage account, and he loses. If he loses the trade, it's gonna impact him very, very badly. But if a professional loses a trade, he doesn't give a fuck actually, because it's just $500. It's just 1% of the entire account. And along with the risk, he has a well managed reward, which is the most important aspect of trading, that is risk is to reward ratio. Risk is to reward ratio. And to see this ratio, you just have to hover on this, and you can see here risk by reward ratio is 2.02. Means what does risk is to reward stands for? Like, as you can see in this trade, the risk is to reward ratio is 2.02. So it means that the risk is to reward ratio is 2. Let's just say approximately 2, round it off. And what does it mean? Means if I risked $1, my reward is $2. That's simple as fuck, right? Simple as fuck. If I risked $1, my reward is $2. And again, if my risk is $2, my risk is let's just say my risk is $2 and my reward is $1. Reward is $1. It turns out to be a risk is to reward ratio of -2, because if the risk is to reward ratio is in minus, you have to be very, very careful, because this is not sustainable. As a trader, this is extremely not sustainable, because this is common sense that you are risking more than your reward, which means there are probabilities of you losing more and winning less. So over the longer period of time, this is not sustainable, and eventually you will be losing more, sorry. So yeah, this was all. You have to maintain, first of all, till now what we have discussed is first of all, you have to risk 1 to 2%, or even 0.5%, or even 1.5%, but the 2% criteria is max, not more than 2% in a single trade. And if you are trading in a prop firm, you can apply this in brokerage accounts and also in prop firm accounts. But if you are trading in a prop firm account and you want to just pass the prop firm account and you want to use the prop firm account as a single trade itself, so make sure to don't cross the limits of daily loss. Whatever the daily loss will be, always take trades with a stop loss of $200 less than the daily loss. Or let's just say the daily loss is of $200 itself. No, it might confuse. Okay, let's just say the daily loss is $500. $500. You can take a trade which is a high probability trade according to your edge, according to your setup, and the stop loss, it's okay to give the trade a stop loss of an amount of, let's just say, $400. It is completely okay because it still gives you a $100 buffer so that you don't lose your account by breaching the daily loss limit criteria. So you have to again, it depends upon the account size in which account you're trading. So yeah, for first, maintain risk, maintain consistent risk. Second is maintain a RR ratio, risk to reward ratio. And the third, the most important and the last part of the simple risk management protocols is build set of risk management according to your setup. According to your setup. Every trader, not just every trader, this might seem a little complicated, the third step, that every trader, and the beauty of trading is if the trade goes in favor of you, you can still trail the stop loss or you can book some partials. So that is also one of the edge a trader can have, that let's just say this is according to my strategy, by the way. So let's just say a trade is of 2 risk to reward ratio, and let's just say the trade comes down to 1:1, and at that time I actually book my partials, because some of the money has to hit my bank account, then only I will feel satisfied, because the floating PNL is just basically the unrealized PNL, and that is actually not credited inside your brokerage account or the prop firm account. You just have to close some partials to get the money actually. So don't hesitate to close the partials, and don't over close the partials, because let's just say the trade is going to, there are probabilities that let's just say you just overbooked the partials somewhere around here, and you get a TP hit, and the TP hit will not generate much amount to get you satisfied actually. So in that, what happens is your strategy actually worked, your entries were perfect, your stop loss and take profit were perfect, and the trade was extremely good, but still then you won a very less amount. So that doesn't make any sense. So overbooking partials is also one of the little annoying thing when it hits your take profit, but when it hits your stop loss, it makes sense that you booked some partials, and you booked the amount securely before it turns down against you. So this was all for the video, and hope you liked it, hope you enjoyed it, and hope you have learned something from this video actually. And this was the very basic actually, this was extremely basic concepts of risk management I explained in this videos, because I don't like to make my videos too long, because too long of a video will be extremely boring to watch. And this was all for the video. Hope you liked it, hope you enjoyed it, and hope you have learned something from this video that is extremely valuable for your trading journey. And make sure to check out other videos of financial derivatives and stuff like that. I have made so many educational videos including the trade breakdown videos too in my YouTube channel, and make sure to check it out. And make sure to use the code down in the description box below if you want to purchase any funded account using the FundedNext platform. You can use the code down in the description box below to avail some crazy discounts if you want to purchase any while purchasing your funded account using the FundedNext platform. So this was all for the video. Anshuman Rao signing off. Peace out.